Let me welcome you to our webinar. My name is David Gooding and I'm a partner, and I'm joined by my colleague Bharti Patel, a principal associate. We both work together in our national lawyers malpractice team. We spend a lot of time dealing with coverage disputes for insurers. A few practical points. First, the session's being recorded. I need to tell you that. Whilst you can see us, I'm afraid we can't see you. We will be having a Q&A session today at the end of the presentation, so please do post any questions you might have in the chat box as we go along. And my colleague and senior legal advisor, Harriet Strevens, will pick them up for us at the end. And if we run out of time to answer all your questions, we can deal with them separately by email after the session if you've left your contact details. Equally, feel free just to contact Bharti and I afterwards separately if you wanted to pick up any further points in a bit more detail. So what are we going to focus on? We're going to look at aggregation in solicitors' primary minimum terms policies. So essentially, we're looking at when multiple claims can be treated as one claim under the policy. I would say this is going to be very much a headline overview given the time we have available. We're going to look broadly at all the aggregation limbs in the minimum terms rather than a deep dive into specific limbs. We'll also give you some examples, hopefully, as we go along. We do want to examine briefly some recent authorities, but you'll appreciate that most aggregation disputes under solicitors' policies are litigated through arbitration, the judgments of which are confidential, and that's because there's an arbitration clause in the policies. They're also hyper-fact sensitive, which is another reason why they're quite controversial and can be quite difficult to deal with. Hopefully, though, we'll provide you with some guidance around how to approach the issues in practice. Just finally, before we move on to it, I just want to let you know, just bear in mind that the wording we're talking about should be the same across the market because it's hardwired into the SRA's minimum terms. But it relates to the indemnity limit of a claim. So there's no specific minimum terms provisions around how you treat the excess as far as aggregation is concerned. So it's up to insurers whether they include an aggregation clause for the excess. I have to say most do. Most of the policies I see have a mirror wording for the indemnity limit and the excess, but not always. So you could have a situation where you've got a pot, say of £3 million, the minimum amount of cover that lawyers need, a pot of £3 million to pay aggregated claims, but you have multiple excesses applying. Let's turn to the specific wording in the minimum terms. Now, we've kept this deliberately slide light so you and we can just focus on the key clauses that we need to be talking about. I'm going to look at the first couple of limbs, then Bharti's going to cover the remainder and provide some concluding thoughts. So taking the first one, you're looking at all claims against one or more insured arising from, so first limb, one act or omission. I have to say, it's pretty rare in my experience I see a dispute over this limb. Tends to be more straightforward. And just remember, we're talking about a specific act or omission by the insured, which gives rise to multiple claims. Now, that might be where the firm is acting for, say, lots of clients in a class action, but negligently breaches a procedural direction, which leads to the claims being struck out. So all the clients would have claims against the firm. And if the indemnity limit was £3 million, there'd be a £3 million pot. So I think that would be sort of one act or one omission. I've been dealing with a similar example on limitation. I hope you don't mind me just letting you know we won that at the Supreme Court recently. And that involved a case where the claimant solicitor acting for a group of trustees has issued proceedings a day late against my clients. So any claims against his firm by the trustees would in principle be aggregated under this limb. Now, I think the limbs get more complicated as you go down. Let's turn to the next one, which can be and has been seen to be quite confusing. That's also been a subject of a recent court decision. So one series of related acts or omissions. So it's an extension of the first limb. You're looking at a situation where you've got multiple acts or omissions by the insured, which gives rise to claims. But to group them together, to aggregate them as one claim, they need to be in a series and they need to be related. Now, there hasn't been an enormous amount of authority on what amounts to a series, certainly recently, and in relation to lawyers' cases. But some older authorities suggest you need some sort of sequential events, a chain of events, much like you and I would consider what a series would mean. I'm not sure it adds an enormous amount to the meaning of the clause, given you've got this word related, but it reinforces the importance of having a chain of events and connecting these acts or omissions. Now, Bharti's going to talk about the word and definition of related in the context of the Woodman case, the Supreme Court case in Woodman, as regards sort of limbs 3 and 4. But as far as related in this limb is concerned, you are talking about acts or omissions, and this is really important, acts or omissions which fit together and are in some way connected, rather than being random and involving similar matters. The limb was considered most recently by a judge in the recent case of Dixon, Cole and Gill. I'm not going to go through that case in a lot of detail, but just briefly, it involved thefts by a equity partner at a firm of solicitors from client account, involving lots of different and unrelated clients. I mean, she was basically an opportunistic thief, and she used a different way of stealing monies as sort of teaming and lading type frauds. Now, insurers sought to aggregate the claims because they well exceeded over the indemnity limit. But the judge didn't consider that the acts or omissions were related. And the key thing here was that despite the fact it was the same lawyer using the same or similar modus operandi, that wasn't enough to connect the acts or omissions. And the judge reinforced the importance of demonstrating a real connection between the acts or omissions so that they fitted together. And the judge borrowed some guidance from the House of Lords in what's a fairly old TSB case now, back in 2003. I think that's probably the last time an appellate authority considered that certainly this limb, and that wasn't in relation to a lawyer's case. But the judge ruled you need to consider what was the proximate cause of all the losses. So the related acts or omissions have to be the proximate cause. So in Dixon, the unifying factor was the lawyer's dishonesty, but the proximate cause of the client's losses were the thefts themselves. So there couldn't be a single loss identified. So you can see why the issue around what is or isn't related can be so contentious and fact sensitive. I've heard that the case is being appealed. It'll be interesting to see how that evolves. Now you might wonder, how on slightly different facts, how that case could have been aggregated. And I suspect you probably need to show some sort of conspiracy between the lawyer and third parties to unify the acts or omissions. Perhaps a more simple example would be where you've got a lawyer who is drafting some advice, whether it's on a tax scheme or some sort of property scheme, and that same advice is handed out to lots of different clients on different days. That would be probably a more simple example of where you've got a series of related acts or omissions, and the advice, of course, was negligent. Let me sort of give you another just brief example while we've got time. I had a case once involving the same lawyer being tricked by probably the same fraudsters. It was a cyber fraud. They hacked into the firm's servers, and the lawyer was tricked into paying away client monies on 3 different transactions involving 3 different clients on 3 different days over the course of, I think, about 6 weeks. Now, the issue here was around whether you could aggregate the excess. And as far as insurers were concerned, there were 3 different claims, 3 different excesses applied. Now, the insured argued that the fraud arose out of a series of related acts or omissions. And this was on the basis that the modus operandi of the fraud was very similar. And it was this that made the insured's acts fit together. Now, my view was that wasn't enough, and insurers were successful in that event. In reality, you had similar acts involving different matters and clients weeks apart, and the only connection between the acts was that they involved the same fee earners and probably the same fraudster. So it wasn't enough to connect the acts or omissions. Now, if the lawyer had been in bed with the cyber fraudsters, it might have changed matters. But you can see, again, just through these examples, other than the obvious example, it's not straightforward identifying under this limb what connects the acts or omissions. I mean, if it helps when looking at certainly the more complicated cases, I try and work out the proximate cause of the losses and the claims by looking at the acts or omissions themselves, and then taking a step back and considering the totality of what was going on, just to see if they're related. And of course, obviously, if one limb doesn't apply, there's plenty of other limbs to consider too, and Bharti's going to turn to those next.
Thanks, Dave. So turning to the last three limbs, you'll see a similarity between limbs 3 and 4, which concern a series of related matters or transactions. Limb 3 is about claims arising from the same act or omission, and limb 4 is about similar acts or omissions. Now, these two limbs were introduced into the known terms in 2005, and are both subject to that important limitation that the act or omission giving rise to the claim, be that similar or the same, is from a series of related matters or transactions. And it's that last bit, related matters or transactions, that was the subject of the AIG Woodman case, which I'll come to very shortly. But just quickly looking at limb 3 and some examples that could arise under that limb, it could be a solicitor giving the same negligent advice on title to multiple clients buying flats in the same building. The matters would still need to fit together, but the act would be the same if the solicitor simply cut and pasted the same report on title to each purchaser. Another example would be a private client lawyer advising the husband and wife about mirror wills, and then negligently advising them about the different tax consequences of setting up discretionary trusts for their children. So turning to limb 4, similar acts or omissions in a series of related matters or transactions. And that's probably the scenario we come up against the most. And as I said, it's that last bit, related matters or transactions, that came under scrutiny in AIG Woodman, which went all the way to the Supreme Court. The case takes us somewhere we're unfortunately not allowed to go at the moment, and that's 2 holiday property developments, one in Turkey and one in Morocco. And briefly, the insured were instructed to hold the investors' monies and only supposed to release them when adequate security was in place. 214 investors instructed the firm. The monies all got released, but the developments failed. And all the investors sued the firm, alleging that the security was inadequate and so the money should not have been released. The primary insurers were AIG, who had a limited indemnity of £3 million, but the claims value was £10 million. So AIG obviously wanted to aggregate all the claims as one, and the 214 investors wanted each of their claims to be considered as separate under the policy. Both took the alternative position that the claims should be treated as 2 claims, so the Morocco development and then separately the Turkish development. At first instance, the court held that the aggregation clause required the transactions to be interconnected or dependent on each other to be related. So on that basis, the claims did not aggregate. The Court of Appeal disagreed with that analysis and found that the requirement for interdependence just went too far. Instead, it held that there must be an intrinsic relationship between the transactions rather than a relationship with some outside connecting factor. Rather than helpfully, they didn't decide if that intrinsic relationship existed here, but remitted the matter back to the lower court. AIG appealed that on the basis that that qualification for an intrinsic relationship was unnecessary, and so all the parties went off to the Supreme Court. I think it's fair to say that the Supreme Court was not impressed with the Court of Appeal's need for there to be an intrinsic relationship, almost an extra layer. Instead, they preferred the approach that the term related required a real connection between the transaction. In other words, that the matter or transactions must in some way fit together. Now, in reaching that conclusion, the Supreme Court accepted that in determining that, so whether a transaction is related, whether it all fits together, is going to be an acutely fact-sensitive exercise. And it's going to involve a question of judgment, not a reformulation of the clause to be constructed and applied. In the end, the Supreme Court aggregated all the Turkey development claims and then separately the Morocco development claims. So there were 2 limits of indemnity of £3 million. And this was on the basis that each separate development fitted together because they shared a common underlying objective. When it came to deciding whether the two developments could be aggregated, they said that the arguments were much weaker. And despite there being some striking similarities, so the two development companies were part of the same group and there were lots of other similarities, that simply wasn't enough. So I think that's quite a high bar that's been set there by the Supreme Court about related. Turning to the last limb, all claims against one or more insured arising from one matter or transaction will be regarded as one claim. An example here would be a lost or failed litigation claim, so where a number of allegations are made about the conduct of the litigation, from poorly drafted pleadings to inadequate expert reports to counsel just not being properly briefed. So those are the limbs. What are the takeaways when it comes to aggregation? The minimum terms are not prescriptive, and it's been deliberately left nebulous to apply to so it can apply to different scenarios. And that's got to be right given the different services that lawyers offer. An analysis of aggregation will always be highly fact sensitive. Related means fitting together. It doesn't mean interdependent, and it does not mean intrinsic. As a QC recently said to me on an aggregation case, take a step back, reflect on the wording and then the facts of the case, and you'll end up with a feeling about whether the claims should aggregate. Unfortunately, the difficulty with that is that the other side will often come to a different feeling about it. So that's the end of our talk. We're now going to take some questions. I'm going to hand back to my colleague, Harriet, who will pick a couple from those submitted. As David said, we appreciate it's a quick overview, so if there are any questions we don't get to, then please do contact us and we'll respond.
Thank you very much, Bharti. We have time for a couple of questions, and my first one is directed to David, please. David, words, series and related. Do you believe that the courts are taking a literal approach to their meaning at any stage?
That's an interesting question, Harriet. I'm not sure entirely. I think just another way of looking at this is when you're examining the interpretation of these clauses, just be careful about using a thesaurus, for example, to justify your interpretation of the word, say, series or related. Think of series as a chain of events rather than, say, random ones. And think of the word related as being something that's connected or fitting together. In terms of how the courts approach this, I think what they have done is they've looked at the wording, taken a step back and provided an objective view. Whether that's a literal or not is another matter, but they have provided some guidance around the interpretation of what a series means and what related means. And I think we need to be focusing on what that guidance is when examining specific examples.
So given that there's room for some ambiguity, perhaps, are you of the view that the clause should be redrafted? Is it time for redrafting? Is the wording too complex?
The minimum terms too complex and need clarifying. That's quite interesting because we probably could have a 15-minute presentation just on that. I think if you're referring to the successor practice rules, I might agree, and I might be tempted to have a go with a pen myself. But just looking at the aggregation clause, it's tempting to say this is really complicated. It always leads to disputes. We've got to have something easier. But in doing that, I think, Harriet, you've got to really be careful about what you are trying to achieve by making changes. And I think if you were to make this much simpler and easier to understand, then you're either moving the line in terms of something where it is really easier to aggregate, so insurer friendly, certainly under the sort of indemnity limit, or really hard to aggregate, so policyholder friendly. And if you do that, there's going to be knock-on effects. That may well be, if insurers are paying out more money, there's going to be less appetite in the market. Premiums are probably going to go up. Insurers are, if they can aggregate easily the indemnity limit, then they're probably going to want to have different clauses around the excess and make that more difficult. So you're upsetting the balance. And that's the whole point. But I think as Bharti flagged in the takeaways, the these minimum terms, certainly the aggregation clauses, are there for balance, and the SRA made that really clear when it introduced these clauses. There is a balance between protecting insurers' interests and policyholders and the public interest. And if you start watering this down, you will upset the balance. And as they are, I think they probably are fairly finely balanced. I don't think they're necessarily policyholder or insurer friendly. And if anyone's interested, actually, this point came up in the Woodman judgment, and I think it's somewhere towards the beginning of the judgment, around paragraph 14. There's commentary by the justices around how this has arisen and the purpose of the aggregation clause and why it is so finely balanced. In terms of, is there anything else you could do just to clarify it? Well, we have got some guidance now from, in relation to the second limit, which I talked about from the Dixon Coles, and in relation to the related matters from Woodman. So hopefully that'll be helpful. Maybe the SRA, and I say this slightly hesitantly, I'm interested to know what other people think about this. Maybe the SRA could include a non-exhaustive list of examples which demonstrate how the wording operates. You do see that in legislation around, say, unfair contract terms. That might be something they could do.
Thank you very much, David. Interesting that your answer is as complex as I think the questioner hoped that their question would be. But if I may say so, a question now to Bharti. We've just got time for this. What if insurers and the insured, or primary and excess layer insurers, can't agree on whether the limit is the limit or the excess? Is it aggregated? How do they resolve the live claims in this situation?
As to disputes between the insurers and the insured, there's an arbitration clause in the policy that can be triggered to resolve that dispute. So that's fairly straightforward. As between primary and excess layers, certainly our view is that we think it's envisaged that the first insurer notified, so here that would be the primary, would continue to deal with the claims until the issue of aggregation is resolved. So much like the situation you have between two primary insurers regarding policy year. If that doesn't happen, there are alternatives to try and resolve the dispute. So the insured could step in and say, I need this aggregation issue to be determined, and then they could trigger the arbitration clause again in the policy. Alternatively, either of the parties, we think, can seek a declaration from the SRA under the participating insurers agreement to sort of say, well, who's going to be dealing with this now whilst we resolve the aggregation issue again by arbitration in the background. And clause 12 has the arbitration in there, so that's the way that it can be resolved. Is that okay? Or you're on mute, Harriet.
Thank you very much. You're absolutely right. We've run out of time for more questions, so I'll pass the baton back to David to close down, if I may. Thank you.
Thank you, Harriet. As you say, I think that's pretty much all we've got time for now, and we'll do our best, Bharti and I, to respond to any questions by email. Otherwise, thanks ever so much for joining us this morning, and please do complete the feedback form, which I'm told will appear on your screens once we sign off. That'll include a little bit as well about how you'd like us to present these sessions in the future, i.e. whether it's in person, continuing online, or some sort of hybrid version. And feel free as well to include any topics you'd like us to consider speaking about. And remember, if you would like us to provide you with a bit more of a detailed approach on this subject in particular, just let me or Bharti know, and we can communicate with you by email. Just to finish, just want to tell you that the theme around solicitors' minimum terms will continue. You'll be pleased to know, with our next session on the 24th of June 2021, when my fellow partners Lisa Taylor and Neil Davis will be speaking about the minimum terms, but also, and importantly, the SRA consultation on cyber cover. I really hope you'll be able to join us for that. Sounds very interesting, and I wish you a very good rest of the day. Thank you.